Thank you, Giorgio. Thanks for giving me the control. Good morning, everybody. So I'm Vincent de Clerfailly, Head of Corporate Service of the GU, and after all these discussions about the technical and legal part, I will just present the three following sections about finance and lump sum. So the first part of the presentation will be about the model grant agreement itself in specific context of lump sum. Reason why it was not presented by Valerie before. Then we will give a focus and present the what is expected for you to do when you have to submit a proposal with lump sum based approach, because there is a specific budget table to fill in, as we do not have the lump sum grant agreement implemented in the system yet, because it's still considered as a pilot since 2018. Then there is a specific action to take at proposal level, and I will explain that to you. And finally, a last section for the members that I will pass quite fast. Those members who are in the meeting now already know how the system works following the first call. Anyway, I make some reminder about it, and at the end, in any case, I will be available for questions and answers. So let's start with the model grant agreement. So the difference for lump sum, for those who don't know, with actual cost grant is that we give the focus on the completion of work packages. So the grant agreement is set up with a specific lump sum share per work package, and once the work package is considered complete, in that case, at implementation phase, you receive the corresponding amount of money for the lump sum share. So I would not say that since we have implemented lump sum grant, we give more focus to the technical parts. That's not exactly correct. However, implementing lump sum grant allows us to spend more time and more focused time, and especially with my program manager colleagues, about the technical implementation. Actually, it saves time of financial review and support during the implementation phase. So the grant agreement will set up the lump sum, which corresponds to the lump sum share, which corresponds to the maximum contribution that the GU would pay you as co-funding. And as I've just said, it will correspond to the full accomplishment of the work committed in accordance with the Annex 1. So basically, there is no major difference with actual cost grants. We define tasks in Annex 1, we define a certain level of co-funding, and the only difference is that you get the payment once the work packages are complete. So we define the lump sum at grant agreement awards, and the slides have disappeared. I don't know if I'm the only one. I don't know, do you, yes, okay, so for me it's back. Sorry for the interruption. From my side, I lost the slides. So at implementation phase, there are no more financial reporting, no more reporting on actual costs. It's automatically money transfer from the moment the work package is completed by you and considered assessed as completed by the GU. And secondly, at ex post level, there are no more ex post financial audits. These are the two main reasons why we considered implementing lump sum pilot was making sense, actually. I'm just going to the next slides. Yes, so for the submission for lump sum grants, when the amount of lump sum is not fixed in advance, the estimated budget must be described in the detailed budget table. That's what I told you before. The lump sum grant technically is not developed in Compass in the portal, so that in the application you have receive a template, a budget financial Excel table, and you need to fill that in order to prepare the budget of your project. And this budget, when it is built, is used as a basis for fixing the lump sum amount. the Europe Trade Programme has actually adopted by analogy the European Commission decision on the implementation of lump sum contribution under Horizon Europe Programme, and that allows us to implement such grants. So the decision, says, this Commission decision says that the detailed cost estimation per whole package and per beneficiary and affiliate entities, if any, should include only costs that would be considered eligible in an actual cost grant. Where relevant, applicants should declare that they have followed their own accounting practice for the preparation of the estimated budget. So what does it mean? That means that when you prepare your proposal, the principle is that in the financial Excel table, you need to prepare what you correspond as 100% of your cost for the project itself. And the decision says that you are supposed to declare in this budget table all the costs as if they would be eligible according to the rules of Horizon Europe. Okay, so this is for the ex ante, and you have a declaration as well to make in parallel that you have also used your own accounting practice. While because after in the process in principle, this is something important to ensure that the budget estimate is estimate in line with your own internal rules and guidance. So, sorry, I've been too fast. As the lump sum is an approximation of the cost, this we know. We already had a lot of questions in advance, so it's the best estimate. The cost included in the detailed budget table must comply with the basic eligible condition, and that's the reason why. So you are still requested to consider the preparation of your budget table as if it was eligible for Horizon Europe program. The budget table, you will see this after, you have a list of cost categories that you need to fill in. And for this purpose, this list of categories actually correspond to the list of cost categories that you have under Horizon Europe program. So it was just for the consistency reason. And this aspect of eligibility condition of Horizon Europe, despite the fact we are lump sum grant, is, for instance, typically important in the case of purchase and subcontracting. So you have under Horizon Europe some basic principles for subcontracting costs that you may know, which are the best, ensuring the best value for money, and be free of any conflict or interest to ensure that when you subcontract task, it is done with a certain level of accounting rules and principles. And for this reason, it is requested you to make this declaration. If the budget table contains ineligible costs, the grant may be reduced even later on during the implementation of the project or after the end. So we will also discuss about that afterwards. Basically, ex ante, at evaluation phase, the proposals are assessed by experts, also financial experts, and also by the GU, where we are checking the proposal you made. And in case some costs are considered not eligible for such a grant, there is a gap phase where we will ask you some additional elements of information. And during the gap phase, it may happen that some costs, with a common agreement, usually some costs are updated a little bit, decrease, and that's the reason why they say that grants may be reduced. This is, in any case, quite standard in all evaluation process. So for the subcontracting, the principle of subcontracting, as I just said, best value for money, no conflict of interest, limited part of the action. This I didn't say, but is of course essential. This you still need to maintain and confirm. But they are not considered to be additional cost eligibility conditions, meaning that once it is declared, it is fine. There is no additional control on that. So in case of breach, as I said, we may reduce the grant in proportion to the seriousness of the breach instead of rejecting costs. So far, it has never happened to us. But if during the implementation phase, if you declare more subcontracting in a technical report, the GU may disagree if it's not considered sufficiently described or motivated and so on. So this is again not specific to lump sum, just to explain you why we make reference to, despite it is a lump sum, we need to consider Horizon Europe eligibility criteria all along the grant agreement implementation phase. we are still requiring this kind of level of justification when subcontracting activities is done. So you do not have to include the subcontracting cost in the Annex 1, just the activities behind, because the subcontracting costs are part of the lump sum share, and we have a clear and detailed budget breakdown in the financial Excel table. So for this reason the reason why the Annex 1 should focus on the technical part, description of activities, roles and responsibilities, and the financial Excel table will focus on all the financial splits. So that's the reason why we must have the subcontracting cost in the financial Excel table, so to be able to see the magnitudes, ask you a question if necessary, but not in the Annex 1. So why have we decided to implement lump sum grant in previous program, and why we are continuing? Because we considered that it was removing all the obligation on actual cost reporting and financial audit. So another important element is that you do not have to prepare a certificate of financial statements if you exceed the threshold at the end of the last reporting period, and you do not have financial ex post audit anymore. And this was considered as a major reduction of the administrative burden in the previous program for our members, and in this new program for all the beneficiaries, giving the focus on performance, as I said, and also easier to manage from reporting point of view. Once the lump sum share is fixed in the grant agreement, it is fixed for each work package. And then this amount is paid automatically as from the moment the work package is completed and assessed as completed by the GU. So, and we may have a lot of questions similar to the actual cost grant. The payment does not depend on successful outcome. We keep having research and innovation or innovation actions, and it's the results. So it's not that the topic is closed, as considered as closed. Is really okay. The agreement we have reviewed that we consider that the work package are completed, which matters. So important information about that. If we do not have certificate of financial statements, if we do not have ex post financial audit, what do you need and what you don't need? The Article 20 of the lump sum grant agreement is quite clear about this topic. We do not need timesheet anymore. We do not need you to keep the payslip, the contract, the depreciation policy, the travel invoices, the actual cost. All this is not necessary anymore. However, you need to keep track of the technical documents, the publication, the prototypes, the allocation of work, who did the work, me, the subcontractor, for what part, in accordance with the Annex 1 of the grant agreements. This is really what matters. And everything will be in any case. So why do we still need some kind of documents? Because not having financial ex post audit doesn't mean that you will not have any ex post audit anymore. The condition of the lump sum grant agreement says that we can still have technical ex post audit, of which technical ex post audit aims at confirming the successful implementation of the grant agreement as it was reported and validated by the GU. So for this specific technical audit, we haven't launched any ex post technical audit yet. It is still under preparation of the monitoring phase, what would be the approach, by who, and so on. We have now launched a pilot phase for this that we will conduct with one of our GU member that will take place next year. And depending on the system works and how the pilot was conducted, also in support of the European Court of Auditors, then we may further consider that for our grant agreement. So now I'm just checking. Yeah, so we have some categories of costs, as we said, for the project. You still need to probably to declare equipment cost. So for this, there is a continuity. You can still, by default, budget in your lump sum project the depreciation cost. So full cost may be eligible, but there are some specific conditions, and so far we haven't considered. Well, we haven't had a case like that so far. So there are some explanation for this, and I will come back to this afterwards. I have a problem with this. So personal cost as well is something to be considered. I will show you how it works in the next part on the budget table. Just for information, according to Horizon Europe, there is a simple way to calculate the personal cost, which is the formula that you have in front of you is the daily rate times the day worked. And the daily rate is considered as annual personal cost for the person divided by 215. This is what you can implement for your for the grant agreement. And if, of course, there are some difference, well, if it's in line as well with your own accounting practice, and if you have different view about that, you can just declare what you consider most relevant for you. For the equipment cost, and then sorry, that's why I was a bit lost. So apparently I forgot to delete the previous slide. So in the sequence of the presentation, sorry. So I've just said for the equipment costs, the topic is closed. So for the indirect cost, we are exactly in the same situation for lump sum grants, and in accordance with all the Horizon Europe grant agreements, the budget table that you are preparing are automatically calculating 25% flat rate for of the eligible cost, of course, for your lump sum share. After, of course, next step, a reduction of the funding rate. So for this, no differences, and it is automatically calculated and integrated into the budget table. For the evaluation of a lump sum grant agreement, in complement to what was explained previously, in the specific context of the implementation criteria evaluation, the Commission decision on the implementation of some lump sum grants request us to do, in support with external and independent experts, 4 specific verifications. First of all, we need to assess and evaluate the proposal submitted and compare it with relevant statistical data. So what the GU will do, the GU will provide to the independent experts statistical data on the cost of labor costs per country, and these experts will compare it with your proposal. So the statistical data are built based on shift program experience and what we have in our own accounting system. They will compare the personal cost that you are declaring in your proposal, and we will compare it with statistical data. And if there are quite significant deviation, we may come back to you, questioning on the reason why it is such level of discrepancies. If we can talk about discrepancies, of course. It's just difference between your own accounting figures and the statistical data. And during the gap phase, we will check with you and ask you additional information on the reason why you applying this level of personal cost for the proposal. And usually, based on the expectation and some explanatory information, we may either confirm what you have proposed, or we may ask you to adapt a little bit, depending on the situation. So usually, as I said, in the past, during the evaluation, usually we intend to understand, of course, your approach, and if you provide us with sufficient justification, there is no problem for us to confirm afterwards. So that's the first element we need to check. The 2 other elements we need to check is to assess the resources from one side that you have proposed in the project, and the lump sum share, the corresponding amount. and if both would allow to achieve the result and the expected output in the proposal for the the expectation of the project. So we're also asking the expert to assess the resources per work package that you have may entered and introduced in your proposal, and also the budget allocated to each work package, and if it looks like consistent. Again, the independent expert will make the assessment and further confirm whether or not it looks like reasonable for achieving the objective, or in case the GU should come back to the proposal and the beneficiaries after during the gap phase. Finally, the last check we need to do in the context of a lump sum grant agreement, we just need to verify that each beneficiary made a declaration of having used their own accounting practice, and this is a simple tick, so that's something quite straightforward. For the ex-post control, I have already mentioned some points. So I confirm again, no? So it's Article 25 lump sum. There is no more financial audits anymore. They may have some check reviews and audits for the proper implementation of the action. That's what I referred about the technical ex-post audit. And the compliance with the other obligation of the grant, like IPR obligation related to third parties, or other obligations, okay? And no more financial audit. So now we're moving to the second part of this presentation about the financial Excel table itself. So the financial Excel table that is available in the proposal, in the table. Sorry, I'm trying, something doesn't work with the slides. Okay, so you have an Excel table with multiple tabs. The first tab contains, so it's a tab that works with micro button that allows you to navigate, add beneficiaries, and so on quite easily. I would really recommend you to read carefully the instructions where you have all information about how to use this table more in detail. So high level, you will have, sorry, if I can change to the next time. Yeah, so high level, one important tab is the one called beneficiary list, so BE list. This is where you can build your list of project participants. You add as many beneficiaries as you want by clicking on the button Add BE, and then you have a new row appearing. Or you can add for a beneficiary as many affiliate entities that you want, adding Add EE below. And then you can apply changes in the button so that automatically the table will create additional tabs in the financial Excel table to ensure that each beneficiary and affiliate entities are able to prepare their costs for the project. So here you have a print screen with different funding rates. So for each beneficiary, you need to select the corresponding funding rate. It's a free text, so with percentages. We have had already a lot of questions about what funding rate to use. For this reason, I recommend you to go to our website, because we already answered to this question in the Q&A. So you have here the link to our Q&A on the website, and I propose you to go to the question 9, 10, and 18 about the funding rate. So in principle, we respect Horizon Europe rules, 70% or 100% for the participants. And there are some specificities for the GU members. And these the members in principle should know based on the first call we already had and in which they have already participated. And if they do not know or require additional explanation, we also have some information in the Q&A about that. And of course, I remain available for any complementary questions you may have. So once you have prepared your financial Excel table with the list of beneficiaries, you will prepare it with the list of work packages that you consider having in your project. It is important to list the work packages. Obviously, the number of work packages will impact the number of payments you will have, and at what moment each work package are expected to be completed for each reporting period. So this is something you need to think about. And There is no limitation in the number of work packages. This will also be assessed during the evaluation phase of the proposal and during the gap phase after with the GUs. So again, you list your work packages, you apply changes, and once you've clicked on apply changes, the macro will automatically create as many work packages as you have planned in the grant agreement for each beneficiary, so that each beneficiary can individually prepare its own lump sum share for each work package, depending on its contribution to the project. And here is an example of an individual sheet for a beneficiary. So once you have created a beneficiary with or without affiliate entities, you would have one tab with information about the beneficiary. It could be the beneficiary one, okay. It will be with the name you gave him, of course, and then with as many affiliate entities in the part. And the reason why the lump sum condition says that you need to declare costs in accordance with the Horizon Europe eligibility criteria is because here in the Excel file you see listed all the cost categories that we have in actual cost grants. So you will identify for each categories of employee the number of units, so the resources you consider to allocate, and the cost per unit for each resources. And these costs per unit are those that we will verify during evaluation phase in line with statistical data. Okay? So then after you have the cost of subcontracting, as I said, it will be described in the Annex 1 for the technical part, but here in the financial Excel table, you need to identify the value and the cost, expected cost of the subcontracting. Then you have the standard category of direct purchase with equipment, infrastructures, other communities, other cost categories as well. And as I said as well, automatically, because it's not available, you can only use the yellow fields for the purpose of filling in the budget table. You have indirect cost, 25% flat rate, which automatically gives you the total cost, 100%, for this beneficiary. And this should be done by work package, of course. And at the end of the beneficiary sheet, you have a summary table taking into consideration the total cost of the project for the beneficiary and its affiliate entities, and the lump sum share that will be integrated in the grant agreement. So the amount of cash you will receive of co-funding will depend on the funding rate you have identified in the beneficiary tab that I showed before. So if you have identified a funding rate of 100%, then it is expected that for the implementation phase of the grant, you will receive for each work package the amount as 100% identified in this tab. And if, of course, successfully confirmed in the evaluation phase and the gap phase. And if you have identified a funding rate of 70%, then you will receive 70% of the value you have presented in this tab. So actually, for this again, at proposal phase, it's a bit like an actual cost grant. You identify your total cost of the project, you apply the funding rate, and after that, you have the lump sum share. So, for your information, you also have a tab where you can make some tests for calculating your depreciation cost. It's just a tool prepared for you. If you want, there is no connection with other tabs. It's just to make your life easier to have automatically calculation as it is done according to Horizon Europe rules. Okay, so at the end, as I said, you have a summary per work package so that you can see for the individual beneficiary sheet. And you also have a BEWP person months tab. After completing all the individual beneficiary sheet, you will find a summary of the effort allocated for all beneficiaries for all the work packages. So it's nice summary table for this purpose. And finally, there is also a table lump sum breakdown, which corresponds to the Annex 2 of the budgets at grant agreement signature phase, where for each beneficiary and affiliate entities, you have the budgets allocated to each row package as lump sum share, net amount you will receive, and the total amount of the lump sum share for your contribution to the project, meaning the total grant amount in terms of co-funding. At proposal phase, as I said, what we're still experiencing now is that there is no automatic process between the financial Excel table and the budget proposal in the portal. So you are requested afterwards, after you have prepared your financial Excel table, you are proposed to, into the system, in the proposal, to encode manually the corresponding figures for each beneficiary. So that's the budget table in the part A of your proposal, and the GU and the expert will just make a cross-check at evaluation phase and gap phase to ensure that there is a consistency. In future, we can expect to have this budget table automatically populated in Compass Sigma, so in the portal, but it will not be done for 23 yet, so it's certainly not for this call, and this is how we have to continue. So the request grant amount, this is what you have to mention as a lump sum share, so net amount of co-funding per beneficiary, okay? Then you have other tabs, and by the way, we also have a Q&A with more details about the different sections of this table that I invite you to consult in case you have additional questions. So income generated by the action is not expected to be used. We have never had this, but in case you know it is there. Then there is something really specific to the GU. The part financial contributions is only for the private members of the GU. And it corresponds actually to the unfunded part and the ICOP. While the own resources is exactly the same, but for the non-member. So only for non-members, you need to use own resources, and it corresponds to the unfunded part of the proposal. Consequently, when I show you the list, the table per beneficiary of the budget, it was 100%, and then depending on the funding rate you apply to the action, you would have to fill in either financial contribution or own resources for the non-funded part. If you are a beneficiary with 100% funding, then there is nothing to fill in these two sections. And finally, the total estimated income is considered income for the project. It corresponds to the total cost of the action. Finally, and only for the members, as you need to provide, in accordance to the letter of commitments and the Europe Trail program, not only ICOP, but also IK, and that IK is based on a plan that needs to adopt by the governing board. We are only talking about indicative IK, so it's not necessarily linked and described in the grant agreement, but we need to have at least an indication of what will be.
Vincent, sorry, we're a bit delayed. If you can accelerate a bit.
Yeah. I suspected that it was the case when I saw you reactivated the camera. So I was already activating, but okay, I will do it fast for sure. You need to provide an additional template, an additional Excel file where you need to inform us about the indicative ICOP and IKA, and it is merged in the same table. So again, it's only for the GU members, not for the other beneficiaries. The members know they have to provide a leverage effect to each action up to 2.263 compared to the funding. So they need to fill in this table with members consolidated for all, one member with all affiliate entities and considered entities at the same row, where the maximum grant amount will correspond to all corresponding lump sum share, net co-funding. And in the total contribution row, you would have the combination of ICOP and IK together, giving us the opportunity to check after review in parallel, also with the IK plan. So in case you don't reach per action to the level of 2.263, then you need to provide a justification, and we will discuss with you in parallel. So basically that's it. So you see, Jean-Jean, it was, so thanks for having reminded me. So I will have a look at the Q&A.
There is just
you
one
already
question
answered to some.
From Armando. If a proposal without GU member needs to be uploaded, you need to upload a blank member's contribution annex.
Yes, exactly.
Okay. I don't see any other questions in the chat, which in one sense is good because we're a little bit delayed. And so what I would suggest is to switch to the presentation for the breakout room.
Yeah, Jojo, if I may.
Yes. Please go ahead, Vincent.
I was muted in between. Just to remind everybody that if you have now additional questions about that, you submit it to the GU and we will answer with the Q&A that was mentioned in the slide presentation, and we'll come back to you. So thank you for your attention, and Jojo, now I leave the floor to you for the breakout rooms.